Welcome to Bit by Bitcoin. It's your host, Dylan Loomis. I'm watching all kinds of people struggle to answer these anti-Bitcoin arguments, so I really think this is a very important episode. All early likes are appreciated to encourage YouTube to share this around so more people can learn about Bitcoin and better defend the technology. But I don't like wasting time, so let's get into this. First up, governments will ban Bitcoin. I actually hear this one all the time, both from Bitcoin owners and skeptics. To start, Bitcoin already has a $750 billion market cap. Here we have a list of the top companies that trade in the US stock market, sorted by market cap from the highest to lowest. Take a look at the far right column as we scroll down. Bitcoin is already massive in size. Start to think about what would happen if the government attempted to ban Amazon. And not only this, but publicly traded companies like MicroStrategy and Square already own Bitcoin as part of their company's balanced treasury reserves. Add to this list many other public companies, more private companies, and investment funds as well. Big-time investors like Cathie Wood, Paul Tudor Jones, Stanley Druckenmiller, and many others already own it. There are actually United States senators that own it as well. Add to the list Fidelity and other financial fiduciaries that are creating services so that their customers can invest in Bitcoin. Federally regulated banks can now officially hold and custody crypto assets. The IRS even has rules in place that treat crypto like a commodity or a property for tax purposes. So my first point here is this: there is incredible momentum behind the cryptocurrency and Bitcoin space. There are tens of thousands of incredibly smart people that have left careers in other fields to start working on crypto and blockchain technology, many of which are actively working with US regulators to help educate and ensure that the government sees the value and potential of this world-changing technology. Bitcoin is too deeply entrenched in the US financial system culturally and technologically. Banning it would also mean losing thousands of jobs, sending innovation overseas, and throwing gas on the fire of a black market for Bitcoin and more activity taking place outside of regulation. I actually think it's ironic because I truly believe that down the road, whether it's 5 or 50 years, the United States government will need the life raft that is Bitcoin due to their monetary and fiscal policies, as well as their ongoing structural deficits. But more detail on these topics in a video coming soon. If the government was going to try to put an outright ban on crypto, that ship has most likely sailed. Trying to ban it now would be a direct attack on corporations, investment funds, banks, and other investors that already own it, not to mention the millions of retail investors. And yes, lighter regulatory hostility is certainly a risk to keep an eye on and is one of the major themes we will cover in our Bitcoin breakdown news segments on this channel. But remember, there are very well-respected, very smart people in crypto working with the regulators every day to ensure that good regulation actually helps the crypto space grow. Regulation is required for the biggest of institutions to adopt crypto, so remember that all regulation is not bad. Listen to this. At a hearing last year on crypto and blockchain, Senate Banking Committee Chairman Mike Crapo said, quote, "If the US were to decide, and I'm not saying that it should, but if they were to decide we don't want crypto to happen in the US and they tried to ban it, I'm pretty confident we couldn't succeed in doing that because this is a global innovation." End quote. In response to this, Jeremy Allaire, the CEO of Circle, said, quote, "I think the challenge that we all face with this is some of these cryptocurrencies, they're literally just a piece of open source software. There's nothing else. It exists on the internet, it's open source software, and anyone can implement it. It runs wherever the internet runs, and these have a monetary policy where these assets are algorithmically generated. That is a challenge that every government in the world now faces. That money, digital money, will move frictionlessly everywhere in the world at the speed of the internet." End quote. And just so you know, there are many more comments just like this from people with political power. And before my next point, I will appease those of you shouting that Bitcoin is already banned in some countries. Yes, places like Algeria, Ecuador, Egypt, Nepal, Pakistan, and Morocco have placed outright bans on Bitcoin by trying to enforce penalties and fines as well as punishments for breaking the laws. It's important to note here though that a lot of these countries are very low on the Global Democracy Index and many are considered to be very flawed democracies or worse. But here's the thing, banning Bitcoin would be incredibly difficult to actually enforce, if not not impossible in many countries. Last time I checked, murder was banned in the US, but that still happens all the time. Unless the government basically shuts down the internet, people will be able to download Bitcoin wallet software, run a node, and complete transactions with very little effort. Don't believe me? Data shows that around 4% of the internet users in Egypt, where it's banned, own cryptocurrencies. Pakistan was actually listed as one of the fastest growing user demographics in Q1 of 2020. So yes, the US could in theory enact tighter restrictions for buying and selling, but an outright ban would be nearly impossible to enforce. Not to mention, it would cause the US government and millions of Americans to miss out on the greatest technology of our generation that is creating the greatest wealth transfer and opportunity of our generation. Next up, number 2, most skeptics will argue someone else will just create a newer and better version of Bitcoin, and so Bitcoin is worthless. There's no inherent value. I'll start with the latter point here. Anyone saying Bitcoin has no inherent value has no clue what they are talking about and does not yet understand the technology. Bitcoin allows people to send value anywhere on the planet instantly for a small fraction of the cost that banks charge you, which is a process, by the way, that takes them days to complete if they can complete it at all. With the digitization of our economy and the billions of people that don't have access to traditional banking systems that will now only need a cell phone and an internet connection to plug into the global economy, I'm not sure how any sane person can't see this massive value in the technology. And this is just Bitcoin, by the way. It's also a hard or a scarce asset. There will only be 21 million coins ever mined. Compare this to companies that can issue as many stock shares as they want, governments can print as much money as they want, more gold can be mined at any time, as based on estimates, there's still about 20% or 50,000 tons of gold reserves that are not yet mined. So hard assets, ones that you can't create more of, are incredibly valuable to wealthy people. If you have a fixed supply, and in the case of Bitcoin, the supply curve also halves every 4 years, but more on that in an upcoming mining episode, as the demand grows, the price can only go one way, and that is up. One problem with gold is that as the prices of gold rise, it incentivizes more mining. More mining increases the supply, which leads to falling prices. No matter how high the price of Bitcoin goes, its source code or its monetary policy is fixed. This means that no one can change it. The scarcity and fixed supply of Bitcoin gives it inherent value in and of itself, and then you add the functionality of a currency, a store of value, and a host of other world-changing features, and you should easily see why Bitcoin has serious inherent value. Just because you can't wear it around your neck like jewelry or melt it does not mean there's no inherent value. And if you want to get technical, remember that something only has value if society chooses to place value on something. This is the case with anything you can think of, not just Bitcoin. To touch on the first part of argument number 2, someone creating a newer cryptocurrency, stealing market share from Bitcoin. If you haven't noticed, this has been happening for 10 years in the form of altcoins. And yes, I know these are not all aimed at stealing Bitcoin market share, as many of them have specific use cases, but just to be clear, people have been trying to create the next best cryptocurrency for a decade. One of the reasons no one has succeeded is because there is something we call the network effect. Here's an analogy most will understand. Let's say I'm sick of Facebook and I want to create a new and better platform. If I create a great platform that may even be better than Facebook, at first I will still have 0 users. In order to incentivize people to leave the network and the connections and the profiles that they have spent years building on Facebook, it would require incredible incentives for these people to leave Facebook and the network they built there. The same is true with Bitcoin to an even stronger extent, in that there is huge infrastructure built up to support Bitcoin. Exchanges, wallets, education, regulations, articles, and trust is a big one that only comes with time. So yes, hypothetically, someone could create a new competing technology that's similar in nature, but to overcome the network effect, especially at this point, it would be nearly impossible. And to satisfy those of you with a deeper understanding of the Bitcoin technology, here's a quick, more detailed explanation of this argument. Those that attempt to copy Bitcoin are basically signaling that they fail to understand the properties that make Bitcoin valuable or viable as money. When Bitcoin software code was released, it wasn't money. To this day, Bitcoin software code is not actually money. You can copy the code tomorrow or create your own variant with a new feature, and no one that has adopted Bitcoin as money will treat it as such. Bitcoin Bitcoin has become money over time only as the Bitcoin network developed emergent properties that did not exist at inception and which are basically impossible to replicate now that Bitcoin exists. These properties emerged organically and spontaneously as individual economic actors all over the world evaluated Bitcoin and then determined to store a portion of their wealth in it. As Bitcoin's value increased, it became decentralized, and as it became decentralized, it also became increasingly difficult to alter the network's consensus rules or to invalidate or prevent otherwise valid transactions. You may hear this referred to as censorship resistance. Bitcoin represents by far the most decentralized and most censorship-resistant monetary system in the world today, whether you compare that to traditional currencies, other digital currencies, or commodity money like gold. And so look, simply put, Bitcoin becomes increasingly decentralized and increasingly censorship-resistant as its value increases and as it scales at all levels on the network. So there are thousands of cryptocurrencies, but none of them have been able to rival Bitcoin in terms of market cap, decentralization, ubiquity, monetary policy, or network security combined. Next up, the third bear argument. You'll often hear people argue that Bitcoin wastes energy. So if you're new to the space, mining for Bitcoin does use a lot of energy. You'll hear the saying, the Bitcoin network uses as much energy as a small country, which of course brings up environmental concerns. If you don't know, I am a Tesla YouTuber, so yes, I care about the environment and I actually see an incredible opportunity for mining to use solar, but I'm going to create a special episode for that. So let's start by saying gold mining also uses a ton of energy. There's money, energy, and time spent exploring for deposits, developing mines, processing tons of rock with massive equipment for a few grams of gold per ton. Then it has to be purified and minted into bars and the coins are transported. It can actually be argued that it's the energy itself that gives gold true value and what made it internationally recognized as money for years. So yes, Bitcoin takes a lot of energy due to the computing power that's used to constantly secure the protocol, which is also partially what gives it value because this makes the network much harder to attack. The real question here is whether the energy associated with Bitcoin is put to good use. Does Bitcoin justify its energy usage and does it add enough value? To date, the market says a resounding yes, and I would agree. A decentralized digital monetary system separate from any sovereign entity with a rules-based monetary policy and inherent scarcity that gives people around the world a choice to store value in it or to send value to others is a deal on a scale that, to be quite frank, there just aren't words for, and it's not fully comprehended by most people, even some of those in the Bitcoin and crypto world. Now look, I'll admit it's a lot harder to see the value of Bitcoin and cryptocurrency in the United States as we've never seen a period of hyperinflation or a serious devaluation of a currency. But if you talk to someone who has lived in an emerging market where their currency was devalued and they lived through hyperinflation, they will have a serious story to tell you. And they would probably caution you that our government's current policies are putting us on a path to experience a similar outcome. And yes, it will take longer because the US dollar is currently the reserve currency, which is something that I'll cover in a future episode, but just know this path that the US government is on is not sustainable. One last thing I'll add here is that Bitcoin miners seek out the very best and the cheapest sources of electricity in the world, which usually means energy that was developed for one reason or another that's now potentially being wasted can actually be used by Bitcoin miners. So I think of hydroelectric dams in China or abandoned oil and gas wells in North America. Bitcoin mining is mobile and can be put close to wherever the cheapest source of energy is. This Bitcoin mining can convert output from cheap abandoned sources of energy into something that, as we've discussed, adds some massive value to the world. And a teaser for a future episode, a Tesla solar roof paired with Powerwalls or a wind farm paired with Tesla Megapacks could create an energy source that is 100% renewable using the sun. This is the future of Bitcoin mining, in my opinion. Fourth, we have the argument that Bitcoin is too volatile. So yes, to date it's been volatile, but please remember, volatility is not inherently bad. If volatility plays out in your favor, I don't know anyone that would not want this. But the argument goes that Bitcoin is not a good store of value or a medium of exchange, and thus it fails at something it was designed to do. And right now, this is actually partially true, at least for now. Bitcoin is not a great place to put an emergency fund or to save money to buy a house in the next 3 months. Yes, it could work in your favor, but that's not exactly the definition of a store of value. Here's the thing, Bitcoin is an emerging store of value. It's only about 12 years old, so it still does carry a significant degree of growth and speculation. The market cap is clearly growing over time, taking market share from other stores of value and growing into a serious, impactful asset class. But for Bitcoin to get to the $750 billion market cap it's at now, it obviously had to exhibit upward volatility. So as Bitcoin continues to grow to a $1 trillion market cap, a $5 trillion market cap, and the hands holding the Bitcoin become stronger, the volatility of Bitcoin will reduce as it reaches an equilibrium. When that equilibrium is reached is anybody's guess, and it could be 5, 10, 15, 20 years from now. But over time, as Bitcoin grows, the volatility will reduce. And the fifth anti-Bitcoin argument is going to be a little bit of a teaser. The argument goes that Bitcoin is too confusing, and even something as simple as where to start or how to buy Bitcoin is too complex for most people to adopt. There are multiple exchanges, all with different pros and cons. There are thousands of altcoins, some of which can only be bought on certain exchanges. There's the issue of how to store it, how to use a wallet, what happens if I lose my private keys, etc. I'll be the first person to tell you it's a lot to understand for new people coming into the market. Now, people are calling it a fad, and I personally don't know any fads that have lasted for 12 years and that are approaching a $1 trillion market cap. But the point here on this fifth argument is that the entire reason I started this channel was to help educate the public on Bitcoin and cryptocurrency technology. I want to help people learn this space and understand it so they can make the very best decision for them and their unique situations. Shouting about price predictions is fun and enjoyable, and there's a place for that, but I think the space needs a strong foundational education, and I hope to be a valuable asset in that space. So if that is something that sounds valuable to you, as well as keeping up with the latest news and regulations in the Bitcoin space, please consider subscribing. We'd love to have you here. If you liked this video and learned something new, I would appreciate a thumbs up. But with that, I thank you guys for watching until the end. It really does mean a lot, and I will look forward to seeing you in the next video. I hope that you have a great day.